Hey everyone, Mortgage Nerd here. So why am I saying that the mortgage market could collapse, all depending on how things go with everything that's going on? You would initially think, well, what's wrong with the mortgage market? Everybody's paying on time, guidelines have been strict, but if you have 30%, 20% of everybody that is employed is going to be unemployed, that's a lot of people who might not make payments. They might get forbearance or default or whatever happens. Let's think of dominoes. Let's think the mortgage company that gave you your mortgage is one domino. And if they closed in the last 6 months and you're not making payments, they might be at fault. Now let's think of another domino being the lender or servicer who's sending you your statements every month. Let's think of another domino as the secondary market. So there's a lot of pieces in here. And we're not even talking about, let's say you're a renter or you're a landlord and the person paying you rent can't pay you rent. So it's another domino in all of this. Why does it matter, the secondary market or the servicers? Well, that servicer's collecting a payment from you. They're supposed to pay your escrows. They're supposed to pay the investor who bought the loan. So what happens? You close your mortgage, it's sold to a lender, sold to another lender, whoever. The statement you get, that's your servicer. They're making money for sending out these statements and managing your escrows and taking your phone calls and doing this customer service for forbearance. So they're making a cut of your interest. Then the secondary market, the investors who bought this loan, that they're investing in these bonds to profit off of your secure mortgage. If you don't pay for 6 months because you're on a forbearance, even if the government says that they should be doing it, how are they going to get their money for their investment made? Somebody's going to lose in this chain of dominoes. So when you stop your payments and go into forbearance, there's a whole domino effect that goes on. You have to think about this. What effect is it going to have on the mortgage industry? And so far, the mortgage industry is not being bailed out. There's no, hey, we're going to help you guys through this. If this happens, if 25% of all mortgages are in forbearance or in default, it could be ugly. I hope not. I think from everything that's going on, someone will step in and help this. I know with SBA loans, if you have an SBA loan like I do, my second mortgage on my commercial building is an SBA loan, that's forgiven for 6 months on part of this whole new CARES Act. So that's it. I think we'll be fine with the mortgage industry, but it's good to know what's going on. Phil Stevenson, Mortgage Nerd.